Yes, hello everybody. How y'all doing today? Lee Lowell here, smartoptionseller.com. Today is Saturday, January 29th, 2022. Welcome to another edition of our Saturday Synopsis. Hope everyone's doing well this morning. What do we do here at the Saturday Synopsis? Well, we look at charts. That's what we do. We look at the indexes. We look at individual stocks. We look at support and resistance levels. We look at technical indicators. I'm a technical analyst. I'm a chart reader. That is what I do to help me find my trades and time my trades to get in and out of them. I'm here to help you become a better trader, show you what I'm seeing, show you what I do, and give you some tips and tricks and things. And what I do could be completely different from what other people see on the chart. So I'm giving you my point of view, and I hope I can help you along the way. And as a side note here, I get people emailing me. They say, Lee, we can see that you're wearing some kind of college sweatshirt most of the time, and I know you can't see it, but let me just pan down here a little bit. So my alma mater, University of Vermont, class of 1989. So there, I think I just outed myself as far as my age. So there you go. That's where I went to college. So let's move on here. What are we doing? We're looking at charts. Let's get right into it. Let's open up. We always look at the SPY first, which is the exchange traded fund for the S&P 500, easily tradable, in and out all day long. You can trade it just like a stock, but it gives us a great overview of the market as a whole. Now, it's been 2 weeks since I gave my last synopsis here. So we have a lot to talk about. There's been a lot of action, a lot of movement. So let's open this up a little bit. And for those that are just joining us, we look at daily charts. This is a daily bar chart. Open, high, low, close bar charts. Each one of these lines is 1 day's worth of trading. And I've got 3 moving averages. I got a 20-day, a 50-day, and a 200-day, all important 200-day moving average here. Those are all simple moving averages. And I have the 14-day RSI down at the bottom with the 80 level and 20 level as my oversold and overbought top and bottom areas. So let's just jump right in. Couple weeks ago, we were flirting with the, we were in this channel. What do? We draw some channels. Channels help us gauge, which direction a market is moving. Obviously, we know since the pandemic back in February, March 2020, we came off pretty good, and then we've just gone higher since. So the market's been in a nice uptrend, and we draw these channels which connect the tops and connect the bottoms over a period of time to help us gauge where the market's been going. So obviously we've been going higher since, and we've had, we have pullbacks along the way. Okay, we've got ups and downs and ups and downs. So we use those pullbacks since we're bullish and I'm bullish, we use those pullbacks as timing patterns to help us get into new trades. What do we do at the Smart Option Seller? We sell put options. We sell put option credit spreads. Those are more neutral to bullishly directional trades. So we're always looking to get in on a pullback and hoping for the bounce. And we use these indicators, the moving averages and the channels to help us gauge the timing. So obviously we can see here, we've had the last few weeks, we've had this big downtrend. Okay, so this is pretty scary for a lot of people. This is a pretty large move. There's no doubt about it. Very large move. And that can scare people out of positions, and it could make people think this is it. This is the end of the world. The market's coming to an end. We're never going to go up again. So I'm here to tell you that that's not how it works. Yes, there's always going to be pullbacks. Some definitely larger than others. There's no question about that. But as I've been saying for quite a long time, if you're in it for the long haul, which I am personally, now I'm not giving any investment advice here, but I'm in for the long haul, we know the market goes up over time. Over the long run, the market goes up. Let's pull back to the monthly, see where the S&P 500 has been. Since we had the financial crisis in 2008, 2009, we've had this massive move higher. And yes, a lot of it has been due to central banks around the world keeping interest rates very low. But that's not the only reason why the market has gone up. The market goes up because the market is made up of actual companies that create actual products, that create actual profits for these companies. And if a company is profitable, there's no other way for their stock price to go than up. Okay, so the stock market is made up of profitable companies, and their price has to go up over time, regardless of whatever else is happening out in the world. Yes, interest rates has an effect, wars has an effect, pandemics has an effect, but those effects are temporary. Okay, here's the financial crisis. Interest rates were brought down, but over time, we'll have pullbacks. Okay, but the market will find its way higher because companies are making profits. Here is the pandemic right here, March 2020, and look how quickly it bounced back. Yes, central banks stepped in again, but just remember, companies are still having profitable products and they're making more money over time. So don't be swayed by the news narrative out there. Yes, we have COVID, we have interest rates that are about to go up again here in the US at least. We have inflation out there. But there's always going to be a news story that can try to scare you out of your positions or try to make you think that the world is going to end. We're going to have a bear market for the rest of our days. It's not how it works. Yes, we're going to have pullbacks. So you have to be prepared for that and look at it as more of a buying opportunity. If you have stocks or indexes, you can buy the SPY. That's what I do for the long run. I buy bits and pieces on pullbacks to keep my portfolio moving higher in the long run. And sometimes we look forward to these pullbacks because it allows us to get into trades cheaper instead of selling down here and then watching it go higher without you. Okay, yes, it's scary in real time when it's actually happening, and you may see your portfolio drop in value. My portfolio drops in value too. But we know based on history, it's temporary and it will go back up again. When does it go back up? It goes back up when it goes back up. We can't force the market to go back up, but we can look for clues or cues to help us figure out, when it may turn. Okay. So I've been buying lightly on the way down, not putting everything out there that I have. And there's a point where I say, okay, I bought enough for now. I'm going to wait to see what happens. So let's look at the charts and see what we can figure out here and what we can glean from our indicators and moving averages and things like that. So obviously the S&P 500 fell out of bed. It fell through the channel. It's fallen below the moving averages. So here's the 200-day moving average. This is a very, very, very important moving average. Now, if you'll look back at history on a daily chart, at least, you're not going to see many times where the indexes fall below the 200-day moving average for more than a short period of time. Now, this was an aberration. This was the pandemic. But any other time that a market moves below a 200-day moving average, it will bounce back somewhat quickly. Quickly, how quickly is that? Days, weeks, definitely not months and months, okay? So here's what we're looking at. The S&P 500 has fallen below the 200-day moving average, and it's having this very volatile, wide churning action down here. What do I mean by that? It means up and down, up and down, up and down, just churning up and down in this very large range. And this was a whole week's worth of trading right here. Very large range, up and down. People getting whipsawed back and forth. Well, what does it mean? Does it mean that we're going to go higher now, or we're going to keep going lower? So I've got some conflicting types of thoughts here, and I know I'm going to sound a little wishy-washy, but that's when you're in a period of indecision. Okay, so to me, if I'm just looking at price action, and price action is just the way that the market is moving, this tells me we've got a big downtrend. We've got a congestion here, which could lead to it's figuring out where it wants to go next. I have a feeling we could see some more downside. I don't know if any of you watch CNBC, but Jim Cramer said something that for once I sort of agree with, is that the one way that the market finds a bottom is that we have a complete washout of all these longs in the market, and a complete washout will look like a really huge long one-day move to the downside, where everyone just says, I'm out, I'm throwing in the towel, I'm giving up. And you'll have this big watershed one-day down move that will bounce very quickly and then will start to move higher. We could see that washout move in the near future. Okay, this could be maybe a bearish flag where you get the long move, you got the congestion, and then the continuation down. Now, on the flip side, we could be heading higher as well. And the reasons for that is because, number one, the RSI got pretty oversold down here. Okay, so we got oversold RSI. We're well below the 200-day moving average for a period of time. a bounce could occur. Now, where did the SPY finish on Friday, yesterday, which was January 28th? It finished just below the 200-day moving average. Okay, you can see on the right side of the chart, there's this little dash mark on this long bar. That's where it closed for the day. So it closed on the high of the day, which is a good thing. But it didn't close above the 200-day moving average. It got close. So there could be more selling. There could be more selling. Now, but the other reason why I think we may see a bottom here is because of the VIX. Now let's take a look at the VIX. The VIX is the fear indicator within the market, and it's made up of or its value is derived from the front month S&P 500 options contracts. Okay, but the fear gauge, it tells you how much fear and volatility is happening in the market, and the VIX will always spike when the market drops. The VIX and the market move inversely to each other. So when the market drops, the VIX goes up. But, and I've talked about this before, the VIX is mostly made up of these quick spikes. Okay, you can see all the spikes, and they don't last very long. You know, a couple days sometimes, not more than a couple weeks at most. Not even a couple weeks, a week or two at most. So you'll see this is where we are right now. We've had the spike got close to the 40 level, which we haven't seen since October of 2020. So typically you'll have the quick spike, and the VIX will retreat, and then the market itself will go back up. Okay, so I'm cautiously optimistic that with the VIX retreating, that means that the selling is becoming exhausted and the market itself is going to turn back higher again. Okay, so we've had this churning down here, maybe because the volatility is subsiding, now the market can run back higher. Plus, we've had a pretty good down move. You know, the stock market is where people make money. And over the last 100, 200 years even, the stock market has been the best place for portfolio returns, you know, better than any other investment. So when you have a good pullback like this, a lot of people, the large funds, the big players see this as an opportunity to get back in, because you can't make good money unless you're in the stock market. And there's a point where it's come off enough, there's enough bargains out there that people will start to buy. Okay, so we could see the buying only because everything's sold off so much, and there's like bargain buys right now. So I know I'm talking about both sides here. Yeah, there's a bearish case and there's a bullish case, but for me, there's a reason why I'm standing aside right now, because there's too much indecision. I'm not confident to know yet whether this thing's gonna start popping now, or if we're gonna have that washout watershed moment. So I'm kind of taking it light in our newsletters, in our Smart Option Seller and Vertical Spread Trader newsletters. We're taking it light as well. We're sitting on our hands for right now, because there's no sense of putting money on the line if we're not really sure where the market's going to go next. So we're kind of light on positions at the moment. And that's fine. It's fine to sit on the sidelines. You don't have to be in there every second of the day trying to make trades. That's not a good. You'll lose more money than you'll make if you're trying to trade in this choppiness here. So anyway, we're kind of light. So we're watching. The other thing that I wanted to show you was the fear index, the CNN fear index. So let me pull that up real quick. Okay, so here we have the CNN fear and greed index. And I think I brought this up before. This tells you how much fear or greed is in the market at the moment. And when you have more fear, that means typically you use it as a contrarian indicator. So when everyone's fearful, everyone's selling, that's the time to get in and buy. Right? When we're at extreme greed, that's when we're really hitting those tops, and maybe you should lighten up on some positions. I'd like to see this get a little bit more extreme fear. I'd like to see it get into the extreme fear level, and that would make me think more that we've definitely hit bottom. So keep an eye on this. I mean, it's kind of a fun thing. Don't use it as your end-all be-all indicator, but it's just something that you could keep an eye on. So let's go back to the charts here. So we have the price action getting oversold. Could have that one last watershed sellout, or we could see that was the bottom. And, we got the VIX coming off, the fear and greed index in fear mode. So that could be a time where, okay, well, we had a good Friday yesterday, and we'll just continue that next week. So we also like to look at the S&P 500 futures, because that thing trades almost 24 hours a day. So I want to just bring this up here. And it has the same pattern as the S&P 500, but it trades longer hours. You could see that it actually closed, here's the close, above the 200-day moving average yesterday. So I'm kind of optimistic about that as well. So this is the futures, and it closed just above the 200-day moving average. You got the churning action here. So let's see. I'm still a little on the sidelines. I'm just waiting to see what's going to happen. And it's okay to not find the bottom. People try to pick bottoms, and sometimes you can get burned. But I think it's better to wait until you see confirmed price action. Let's look at the NASDAQ, and we pull up the QQQ. I know I have a lot of stuff on the screen here. These are just things that I've marked up in the past. You can see the long channel, and you have some triangle patterns and other channels within the long channel. Okay, so you have longer term moves and then these shorter term moves. So we had the sort of a sideways channel here, and it popped through just like the S&P 500. Now the NASDAQ's gotten hit a lot harder than the S&P 500. You got a lot of these tech stocks that will react a little bit more violently when there's news of potential rising interest rates, because a lot of these companies have to borrow money. So their bottom line is more dependent on how much they're going to have to pay in their debt, and if interest rates go up, their debt levels are going to their debt payments are going to go up as well if they're taking out new money, borrowing new money. So anyway, we have the churning action here, way down below the 200-day moving average. I just think that spending this much time below the 200-day moving average is based on history a reason for the snap back higher. The RSI got close to oversold as well. So we've had a lot of selling. We've had a lot of quick selling. But once again, we could have that watershed sell-off, and then it'll bounce. It's always a quick one. It's big one-day move, and then the bounce comes. Or we found the bottom and we're ready to go higher. So once again, we're light here. We're staying on the sidelines till we can see what happens. The Dow. We can look at the Dow. This is the diamonds, the DIA, which is the exchange traded fund for the Dow. The Dow's been a little bit more flat, doesn't have the huge moves like the S&P 500 and the NASDAQ, but it still had the sell-off over the last few weeks, below the 200-day moving average. But the Dow, and if you're playing a lot of different stocks, you'll see some of these old Dow stalwarts didn't get hit as hard, the individual stocks. So there's that rotation. People are selling the tech stocks. They're buying more comfort stocks, these old fuddy-duddies, which are not bad, but so the Dow's a little bit more flattish and could help you emotionally if it's hard for you to accept a losing position. But anyway, all right, so let's take a look at some individual stocks here and see what's happened. And so we go through my list here, and we'll open up with Apple, because Apple was our savior yesterday, Friday, January 28th. Apple had earnings that came out on Thursday, the 27th, or was it the 28th? No, the 27th, I'm sorry, was on Thursday after the market closed. And so Apple was up $11 a share yesterday, Friday, and it basically pulled everything up with it, which is fine. That we needed that. So here's Apple. I'll pull back a little bit. Apple had all-time new highs above 180 not that long ago, and it fell down with everything else, but it had the nice move yesterday, got back above the support area that had been broken. Now it finished on the highs. You can see the dash mark, finished on the highs, and it's just touched the 20-day moving average here. So Apple was leading us yesterday. Thank you, Apple. I'm long Apple. People have been asking me, what have I been doing in this market? As I said, I'm buying little bits and pieces. I'm nibbling along the way on the down move. And, because I'm long term, I'm holding for long term. I know these stocks will go up over the long run. So that's what I've been doing. Apple, let's hope that it can continue and start making the move for more all-time new highs. Will it hit it very soon? We've got some back and forth to do probably. You may see Apple trade around the support area for a little bit. Hopefully it won't get too much farther below, again, the support line, which is roughly around $168 or so. But we'll see. We could have some churning back and forth. What else do we have? That was Apple. We'll look at Tesla. Tesla is very volatile, as we know. I can't trade it, outright. I'll sell some way deep out of the money put options on Tesla. Hundreds and hundreds of shares lower than where the stock currently is, strike prices. But it's hard. The last thing that I drew was this channel, and 2 weeks ago was on the 15th, 14th, so that was right around which day? So right around here, it was hitting along the top edge of the downtrending channel, and I said, is it going to break out to the higher, or is it going to get knocked back down because of the resistance? And obviously, it got knocked back down. So here it's sitting. It found support right on the 200-day moving average. We had the line here around $900 a share was the last support. It went through that. Now it's found support at the 200-day moving average. Let's see if Tesla could help the rest of the market bounce here and pull everything else higher with it. But for right now, it's on the bottom leg of the edge here of this channel. So let's see if it could bounce. Amazon got hit pretty good too. So Amazon had been in this long channel, sideways channel, was in a smaller channel here, and then it tried to pop above it a few times. And it couldn't do it. Amazon's had a pretty big move down. And here was the bottom leg of the support line, which was, 2,800. Let's see where this was. About 2,875 or so. And it fell through it, but it's churning right around the support area. If I had just extend this line a little bit, you can see that it came up, finished on the highs of the day yesterday. So like the indexes, you can see the churning action at the bottom here, getting oversold. So I'm hoping that this is the bottom and we'll start to see the leg higher. I don't want to see that watershed washout moment because that's scary. We don't like to see that. So let's hope we found the bottom and move up. But once again, we're a little light here because we want to see what's going to happen. Let's talk about Netflix. Because I wasn't here, didn't give a synopsis last Saturday. Now Netflix had its earnings and just the market crushed it. You can see it went from $500 a share all the way down to $350, so it lost about $150 a share. But the big thing is that Netflix has lost about 50% of its value. It's given up half of its value since making all-time new highs here of $700 a share on November 17th. So a little over 2 months later, it's lost 50% of its value. That is massive for a quality company like Netflix. Half of its value, 700 all the way down to 350. You can see how low the RSI got. The RSI on the low got into single digits here, got around 9, the 9 level. That's just insane. So this could be the bottom for Netflix. I mean, it was just way oversold. I don't think Netflix is going to go much lower. All the selling from the earnings announcement is done for now. Should be done. So it'll probably trade around here for a while. It has to digest a huge move like that. What do I mean? It means we're going to trade sideways for a while until people figure out, is it worth buying Netflix now? Most of the selling should be done. So it could churn around here, and then slowly it'll start to move back up again. I mean, losing 50% of a value, that's a humongo move. So I'm going to keep an eye on Netflix and see if it starts to turn higher, then I'll know that, okay, it has found the floor and the bottom's in, and should slowly start to move back up. So we'll keep an eye on Netflix. What other stocks do we like to look at? AMD, because we always talk about AMD. I like AMD. AMD's come off quite a bit too. Was around $165 a share a few weeks ago, or a month or almost 6-7 weeks ago, and now it hit 100, just under 100. So for me, when I like to buy nibbles here and there, I waited until it came down to the 200-day moving average, right around $109, $110 a share. And so I bought this past week, last couple days, in between 100 to 110. I actually was able to buy some at $100 a share. And so this is where I bought in. Some shares, 100 to 110. So this is my range. Let's see if it'll continue. The support is right around 100. But we're getting oversold here. So I'd like to see it bounce back with everything else. It finished the day on the high around $105 a share. So we'll see what happens with AMD. Okay, so let's take a look at some other stocks. Let's go through the list. Microsoft, always a solid. What's happening here? Okay, so Microsoft, sorry, I had a little glitch there for a second. So Microsoft still strong, popped down through the 200-day moving average, but came back very quickly. You can see they had earnings that came out and got knocked down, but it popped really good. So finished on the high yesterday. Let me pull this down a little bit here. So Microsoft, people love Microsoft. So use the 200-day moving average as basically the last line in the sand. Came down, popped back up, but it had earnings the other day. So obviously, I think people still like Microsoft, still in an uptrend. So keep an eye on Microsoft. Let's see what else we have here. Intel looked like it was starting to break out, but then it just crapped out, hitting lows here. Close to $46 a share. I'm not in Intel. I'd rather play with AMD. Nike. These are. Talk about stalwart companies. Nike, the biggest brand on the planet, basically, coming down. It's lost $40 a share. Is it worth a buy here? Maybe a nibble if you want to get long Nike. Maybe sell some deep out of the money puts if that's your thing. Keeping an eye on Nike. Oracle, it's been coming down. Not sure if the selling's done there yet. Let's see. Cisco. Let's take a look at Walmart because I like to talk about Walmart. I love Walmart too. Right, look at that. I had drawn this line a long time ago, right around 135 support line. Yesterday, Friday, January 28th, popped down below it when the early sell-off and then finished on the high of the day around 137.5. So I like Walmart on the support around 135. Maybe nibble a little bit there if that's your thing with Walmart. Disney, same thing. Another institution. Everybody knows Disney. I've been buying Disney a little bit down here in the bottoms too. Eventually Disney's going to go higher. Eventually. I'm nibbling down here a little. Got way oversold on the RSI. So that kind of gives me some ammunition to nibble a little bit on the lows. And it's going to go higher at some point. So I nibble a little bit. That's what I'm doing. We looked at Tesla, the pharmaceuticals. You'll see a lot of stocks sitting right on that 200-day moving average. This is Eli Lilly, Bristol Myers, Pfizer, Merck. Look at all the pharmaceuticals, Kellogg, Verizon. We've talked about Verizon before. Let's take a quick look at Verizon again. So Verizon, been in this downtrend. I've been talking about Verizon. I use this as the example of waiting for it to bounce back, to get in. Now Verizon been in this channel, came down, got even lower than the second channel down here, and then it popped and made this bull flag. And I talk about bull flags of bullish, and it did pop up bullish, but it got knocked back down with the rest of the market. Although yesterday, you can see right here, closed on the highs of the day. Is Verizon a buy here? I think Verizon sort of found the bottom here. You can sort of look at this as a head and shoulders bottom. You got a shoulder here, you got a head here, and the other shoulder here. I think if it gets back above $54, $55, Verizon should start to move higher again. So I'm keeping an eye on Verizon. PayPal, I like the payment sectors. PayPal and Square. This is PayPal. Getting hit with the rest of the market. Maybe we got some divergence here where you can see the price action still going lower, but yet the RSI sort of moving higher. I'm not sure I'm ready to get in yet. Square, Same thing. I think Square's a little weaker than PayPal. Yeah, look at this. Just this constant and got below the 20 level on the RSI. So, maybe Square and PayPal are starting to find some bottoms here. Keep an eye on it. You don't have to try to pick the bottom and get the exact bottom so you can brag to all your friends. You probably want to wait for the price action to let you know it's time to get in. But this is, what we can do is draw the channel here to kind of help. You kind of connect the tops, you connect some of the tops, and you connect some of the bottoms, kind of give you the visual of where the stock is to help you make that decision of when it may be time to get in. Okay, so it's really down this bottom leg here, got oversold. I think the next move should be back up towards the top of the channel. Now, whether it gets above it and out is the big question. So it could pop above it and you think, okay, this is the start of the the move higher, and then it hits the resistance here and then gets knocked back down again. What you want to do is you want to wait to see it pop out of the channel, have the sideways action, and then start its move higher. So, Square may not get back into that sustained uptrend until it gets to maybe above $140 a share. It has to get outside of the downtrending channel, have some sideways actions, and then move higher. Then you're sure that, okay, I'm getting in on a more bullish leg, a higher probability trade. Or else, if you try to get in early, it could get knocked back down again. So I'd wait till it gets out of the channel, sideways action, and then moves higher. That's the kind of things that I'm looking for. Lululemon, downtrend. I mean, it got the RSI starting to turn higher. Costco, McDonald's still strong stock. Didn't get down to the 200-day, but look at the move higher. It was up over $7 a share. Pepsi, still good. Pepsi, let's take a look. Just nice action, hugging along the 50-day moving average. Pepsi looking good as a price mover higher. This could have been an area to nibble on some shares. I think Pepsi is going to just keep moving higher. What else do we have? Home Depot had a good day yesterday. Twitter. People like to talk about Twitter. Let's see what Twitter looks like. Twitter is in the down move. Got the RSI and the lows again. We could be trying to find a bottom here. Do you want to pick bottoms? Maybe you could nibble a little bit. I'm keeping an eye on Twitter. This could be the bottom, and it could start to move higher from here. So just keep an eye on Twitter. It's had a nice pullback. This could be a bargain for some of you if you haven't bought into Twitter yet. What else? I don't like to Facebook. I'm not a fan. IBM, Google. Google's come down under the 200-day moving average as well. Keep an eye on Google. It may bounce back. So let's talk about the Bitcoin stocks, Riot and Mara. Bitcoin's been losing a lot of price action too. So this is Riot coming down to getting kind of oversold, but it all depends on where Bitcoin goes. Let's look at Mara. Same thing. It's following Bitcoin down. I have no stake in either one of these. Just showing you these. Peloton. We know the story of Peloton. Just crapped out. I mean, let's go back to the monthly so we can see where it had its IPO. The low of the IPO was under $20. This was, what was the low here? Was $17.70. We're at 25 and change. Maybe I'm not even going to say buy Peloton. It's just the company. Who knows what's going to happen? I don't think it's even worth getting into. But keep a watch on it. eBay still on this, just moving down. So let's talk about Clark's, because this is a position that I am in, and I've talked about this before. Been waiting for Clark's to finally break out of the sideways action. I had gotten in around $175, $176 a share, which was, I think I got in around here, went up to high 180s, thought I was doing pretty good, and then it just got crushed. There was some investment firms that downgraded the stock a little bit, so it dropped down to 165 or so. I'm holding. At least I think I got in at a good level. I'm holding. Maybe I could have stopped out here, but I didn't buy too much, so I'm going to hold and see what happens. But Clorox, unfortunately, got knocked back down into this middle of this channel here. Hopefully it could find its way higher. All right, I think that's all for today. So the bottom line is here, we're kind of in a holding pattern. Let's bring up the SPY one more time. We're kind of in a holding pattern here, churning down towards the bottom, just under the 200-day moving average. I'd like to see a continuation next week, but we could still be in for that watershed big last one-day down move. So I'm kind of holding tight. You don't always have to have a conviction. The market sometimes will tell you it's not ready to show you where it wants to go. So it's okay to sit on the sidelines. That's sort of where we are now with our newsletters and where I am personally, even though I've been buying little bits and pieces on the way down, just to say I can dollar cost average a little bit. But I'm waiting to see what the next action is here. Okay? When you're in this channel, you have more conviction that you can make these trades with high probability that it's going to keep moving in that direction. But now we've had the knockdown, so we need to wait for it to find the bottom. I don't like to short. I don't take bearish positions all that often because I don't do well with them. I can't make money enough on bearish positions, so I stick to the bullish positions and I wait for the confirmation. All right, so that's all for your Saturday synopsis for today. Let's quickly take a look at our website. Give me a quick second. You go to our website. We have our free put selling basics guide. Go to smartoptionseller.com. That's our website. Put selling basics here along the top. This is what we do. We sell put options. We sell put option credit spreads. But come here, put your name and email address down at the bottom. We'll send you a free copy. That's what we do. Over here is our services tab. We have our newsletters. We sell put options, we sell put option credit spreads, and we have our one-on-one coaching session. If anyone out there is looking to get another leg up or just increase their option trading knowledge, think about our one-on-one coaching. We're having great success. We have taught a lot of students, and it's going real well with that. All right. So hopefully this video today has been helpful to you. Give me a thumbs up, leave me a comment. Don't forget to subscribe. Send me an email as well. Love hearing from you. All right, that's all for me today. I hope everyone has a great weekend and a great trading week ahead. This is Lee Lowell signing off.